Hey, how's it going, guys? Welcome back to mentfx, and in this video we are going to deal with some key elements of structure and talk about it from a sense of institutional perspective and retail perspective and show you where the difference really lies. So if you haven't yet, make sure you follow my Instagram, just mentfx, very simple. Just posting things throughout the day, testimonials, everything like that. If you do want to join the mentorship, it's only available at this website right here, which is this launchpass.com/mentfx/mentfx. Other than that, I will not offer my services anywhere else, so please do not be scammed, and let's dive right into it. So why did I name this video Structure is Structure? First of all, this week has been absolutely amazing in the mentorship. We caught some nice EU buys, looking for that liquidity to be tapped over the week, and we just had that crazy move up into it. At the beginning of the week or so, we'd had some Australian dollar, US dollar shifts in bearish structure, and we had a sell here that we wanted to take much lower, but we took liquidity partials along the way, and once it tapped into here and we got another partial, it pretty much got stopped at break even. We had another beautiful entry in here, which ran about 1 to 6 at partials in around 1 to 3 or 1 to 2.5. And that got tapped out again as price came back up, right? Putting in some of that short-term bullish structure before breaking back down bearish again, and probably will continue somewhat bearish into the fulfillment of the imbalances in the areas inside of here. Now, the point of this video today, and again, I'm just going to go really quickly and show you guys a little bit about what happened this week. So we had that beautiful, so there's the entries, but we had that beautiful price come and tap into the refinement area we had on a 30-second. A schematic type 2 Wyckoff distribution began to play out, and from there ended up collapsing down, looking to sell stop the overall schematic because it's a much lower time frame schematic, and seeing tests at those schematics is not always the case. Had the sell in right there with the stop loss moving to break even relatively quickly. Price pretty much melted after that. As you can see, price melted and we began to manage to new lows. And as you can see, price just kind of broke down very quickly. Partials were taken very early at, if I can find it, at this first demand zone, just in case this bullish structure wanted to maintain itself, right? And then we were looking for this structural A to continue to make new lows. Off of, like, we were aiming for a 1 to 110 overall trade that would have ran, much less actual percentage points because we're partially in the way, but that's what we were looking for. At the same time, gold delivered a beautiful distribution and began to break down, giving you entries off of tests in the supply zones here, off a new test inside the supply zones here, and then never, I don't think, made it back up into here before coming lower. Again, similar things are happening where you're looking for partials at the demand zones, seeing as structure is delivering like so, right? When you have price moving like this, and even if you expect it to come down here, right, and price begins to, for instance, distribute in these areas, and you get to catch a distribution off of that structural shift on a lower time frame, even when you're taking this lower, you need to recognize that this move right here is never guaranteed, and the idea that this move will always make it all the way down here to its previous structural point is in some cases nonsense. So what we do instead is along the way we look at valid demand zones, valid areas of imbalance, which, as a lot of you will remember, are just areas from a wick to a wick, right? So, like, for instance, if I zoom in on this right here, this wick to wick behavior is known as an imbalance. This wick to wick is an imbalance, wick to wick imbalance, right? So those are areas where price had moved in such a way that more likely than not in the future, these imbalance areas of orders are going to be fulfilled. So they actually function as fantastic targeting areas for future partials. And as you can see, price did indeed begin to break down towards them, but they never even made it there. So this is why we target the way we do. Why was there partials taken here? Because of the fact that we had this structural point being made, right? That structural point is breaking structure created by the demand zone in here, which also, as you can see, grabbed the liquidity below these lows here. And for those of you that are new, make sure you watch my other videos. But for those of you that just want a quick synopsis, below every swing low and every swing high, we assume are buy stops and sell stops. And in this case, we see a bullish trend, which means we are aware that these sell before buy candles, or also known as demand zones, are grabbing the liquidity, and the sell stops resting below these areas of liquidity where people are getting in prematurely, being transferred out of the market by these big sells into buys by institutions, and then price basically makes its way back down. So even though our overall target was very, very long term, looking for completely new structural lows to be met down in these areas and potentially even down here, that's very, very long term. we again are aware of the fact that because of the way we trade, price can move back and forth a multitude of ways, and on the distribution way down, we use those imbalances, we use those structural break areas and their demand zones with imbalances within them, right, to begin to take partials in the case that price wants to stop, reaccumulate in certain areas, because we do trade the footprints of smart money. We are not smart money, and wants to go ahead and accumulate into new higher prices and begin to put in a new structural institutional order flow into a given direction. So in this case, we had this break of structure higher and price began to come lower, shifting structure on a lower time frame and giving us fantastic distributions, or if you wanted to trade on the higher time frames, fantastic grabs of liquidity, right? So all the highs here function as, if I can actually get the tool on there, all the highs here function as liquidity. Right, many people are selling into this prematurely, looking at this trend right here to sustain and continue dropping. Instead, they go ahead and get taken out with the big buy up from the institutions, the big move down. Then you have the test of that zone, right? Fulfilling, again, the inefficiency within there, which is this candle, fulfilling that and dropping lower, right? So this is how structure can shift for your own entries. And as that structure shifts, what do we target? Well, we begin to target the actual, so let's get rid of some of these lines. And what do we begin to target? We begin to target the actual areas that in the past functioned as imbalance creation areas and areas of liquidity, right? Not liquidity, sorry. Areas that had grabbed liquidity that have now left behind orders that still might need to be mitigated. So if we just draw a line across this open, or even draw a box, right? It's up to you how you want to do this. You can see why price came here, why it stalled, and why it stopped around this area before bleeding a tad bit higher, before then liquidating some more people on the short side, right, at all these highs here and the highs here, before then collapsing back down to liquidate the areas in here. So that was all done after fulfilling all the orders in here. And again, for those of you that don't know what for those of you that don't know what mitigation is closing previously open orders. So what do I mean by that? In the areas here, right, recognize what price is doing. If we drew this out in an easier to see format, it's basically this. There's lows, 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 a big move down, and a continuation upwards, right? When this happens, there's a ton of orders being sold in by smart money or the composite man, whatever you want to call it, in these areas here. And those huge sells allow them to take very, very big positions that come and liquidate people that were previously looking to buy equal bottoms, triple bottoms, some kind of ascending triangle, shark fin soup patterns, whatever, the good old stuff, support lines, break and retest lines, whatever it might be. This move here is made to liquidate the people that are moving their stops aggressively, that are getting involved with smaller stops, and as it takes them out, are able to enter on those sell stops, because sell stops offer the institutions or the banks an area to be able to buy. So when they're able to buy up in these areas, they take the price higher. But as they took those buys higher and begin to take profit on those buys at certain highs, right? So if you don't know what I'm talking about here, make sure you check out some of my other videos where I talk about structure. And when structure breaks happen, we assume that the next structural point functions as liquidity. So again, that's something along the lines of higher highs, higher lows. But what's actually happening is we're putting in new liquidity areas to be grabbed in the future. But at the same time, we are taking out people that are trying to catch tops of a market and allowing this move to liquidate them over and over again as they begin to try to funnel into position. So even though there were a lot of buyers in these areas at this support line right here, and they were liquidated by this move here, which is shown by this right here, right? Lots of sells into this move just to buy up these areas and then take those into profit. At the same time that there were people buying here, there were also dumb money buying this triangle right here, right? Or whatever, this shark fin pattern, whatever you want to call it. And as it breaks out, people are looking to sell into this with their stops above here, above here, above here, and so on and so forth. And then they get liquidated as prices move higher. So again, there's a creation of liquidity on both sides of the market, and following that market using structure is what allows you to get into some of the best moves. Now, why were we targeting this area as a potential partial? Well, because when they did this whole act of selling hard to buy up all these buys, they leave behind sells that are still open and need to be mitigated, aka the orders that were sell orders on behalf of institutions in here are still open and making, and basically in negative millions, in some cases billions, or I guess you could argue trillions of dollars when price comes up here. That's fine for the institutions and the composite man. Why? Because they control the market and they know they can make their move right back down there to start closing those orders at break even. Why do we have 1, 2, 3, 4, 5, 6, 7, 8, 9 taps of that area? Because of all the orders that it required to send this price lower before sending it higher, right? And all those orders were being mitigated in all these zones, which were all, again, areas for you to look to either scalp buys off of, look for structural shifts to scalp new buys off of, which still could have been scalped even with these mini moves inside it, right? With new buy opportunities in here as price, again, shifts higher, break structure, comes to test the last down moves for the up moves. Sorry that I have so much shit drawn onto the chart, but the idea that I'm trying to get into your mind is the fact that we have the liquidations and manipulations and creation of liquidity in absolutely every single area, right? So what I wanted to deal, so again, it was a great week for most of us, and what I actually wanted to deal with in this specific video is actually the idea of structure and why we are able to do what we do the way we do it. Okay, so let's go back to EU very quickly because it's actually a much better example. It looks a lot cleaner. We'll go to like an hourly chart so you guys can see what I was looking at. And the idea here is price had over the last few days or over the last week, however long it's been, come to tap this very, very bullish structure right here. And after the tap of the areas and inefficiencies inside of this zone and the fulfillment of them, we began to see bullish movement to the top side. Inside of this bullish movement, again, think about how retail sees this, right? We see this big move up, this failure to go lower, and a move up, right? So this, of course, for everybody on the map is a break of structure. Now, the thing that differentiates us from a lot of the retail crowd or the mass crowd isn't the fact that we see this break of structure as anything less than it is, right? It's true that when we look at this, we see this move right here the exact same way as everybody else. What do I mean? What do I mean by that? Retail at the time of might be looking at, you know, lower low, lower high, lower low, lower high, lower low, lower high, lower low, break a structure. Okay, so they're correct, and they might be looking for this resistance to become support. You know, it doesn't get down there, break a structure, and now what are they looking for? For potentially this resistance right here to become support. And if you notice, it actually kind of works, right? So there is some bearing to what they do, but also, again, and I ask this question all the time on this channel, what do you think retail is doing when price gets to this area? Are they just going, okay, great, that resistance has become support, let me try to buy it? Or do you think they're looking at it on a lower time frame and it's being played by the way we impulsively break through that zone, begin to test it, and break potentially lower, right? Are they then selling the zone? Or are they on a higher time frame waiting for it to wick the zone and looking to buy it on the way up? If they are buying it, how are they moving their stops? Where are they looking to get involved? How are they partialing, right? So again, it's not that retail concepts do not work. It's that they work poorly, and when you do get involved, or the areas you try to get involved at function as areas to disturb you, to make you think one thing or another without getting you into moves that might be of great sustenance, right? So a retail move on this end might look something like this, right? Let's say we have this engulfing candle, whatever pattern. Maybe you buy in there, stop below some of the lows, right? How do you move this? Are you just targeting the highs? Are you targeting this resistance here? Because remember, there also has to be some kind of form to your targeting. If you're just trying to target higher highs and higher lows, then this is your target right here, which in this case, you know, works out pretty well for you and runs about 1 to 2.25. Now on the other end, what we do is we kind of forget about this found logic of resistance becomes support, and we go into the actual price itself and ask ourselves how price is being delivered. So what do we see? Again, we also see this as a higher high, a higher low, a higher high, we expect a higher low, and then we expect another higher high, right? So in this case, no matter who was looking at this market, the way it had delivered in terms of structure was the same for whether you were retail or institutional. But now, how did the institutions, or how did we as institutional traders look to get involved in this? This is where our refinement comes in. This is where, for instance, when I post a post on Instagram, I mean by this, right? Both institutional traders, so this is future you, and retail traders, this is you right now, if you are a retail trader, look at this market the same way. They see the break of structure and they want to look for it to keep targeting new highs. They want to see that continuous bullish structure, right? And what happens is they look to get involved on the mini confirmations inside of here, right? With the stop loss again below the lows, looking to target highs, and in some cases get tricked by the new formed trend lines that happen in these areas, by the 1, 2, 3 trend lines that happen here, right? And then get liquidated. So they get really stuck on what side of the market they're on. In our case, we see these as break of structures, and we look at the areas that cause those, right? The down moves before the up moves, the areas where prices had been manipulated and have to be mitigated to move to a higher price. And this is what we're able to do off of the confirmations in Wyckoff, in the weak to strong hand transfer, and so on and so forth, okay? So what do I mean by that? Again, in this case, you can see there is a resistance that becomes support, and it actually works based on what time frame you're looking at. If you had been on a lower time frame, you might actually be stopped out by this resistance. If you had been looking at it, you might have started to see this as a trend channel, right? And you might have gotten played by this trend channel and taken a loss as it begins to break, comes back inside, you know, tests it. I don't know exactly how they're looking to take this. Maybe they're looking to sell into it as they see the, as you can see, the mitigations of it right here, and it collapses back in again, comes up, closes right back inside that channel. So maybe they're starting to look at that as bearish price action, right? This is how retail constantly gets tricked by the market, because they have things that they look for in the market that sometimes disconnects them from the idea of what the higher time frame structure is doing. For us, we look at this as institutional based structure, and we're looking for it to continue as it is delivered to us. So instead of looking at the support resistance areas, we go to the source itself and we ask ourselves, where did the orders in this market come from to make this large move happen, right? And just by doing that, I mean, you can tell the last down before the up move is right here. Now, if you follow it, right, the next one that mitigates it is this one. And if you keep following, the next one that mitigates it is this one, right? And at this point, we've also found an area that has left behind an imbalance. And what do we know about imbalances? In institutional order flow, before a move wants to continue, oftentimes we will see the fill of at least 50% of it or the entire area. So in this case, you can see very easily now why price came into this area and then began to move higher. And as it moved higher, as smart money traders, we're aware that these institutional shifts can still give you the opportunity to get back in, which is why we were able to catch, again, the much smaller time frame entries instead of the entries that might look like I said off the break, right, that might look like something like this, right? So this could be an example of retail, maybe a little bit higher. I don't know how they would be targeting exactly. I don't know if they'd be looking at some kind of fib level in here. I don't know if they'd be looking to even target this, or maybe looking to target, you know, the resistance that I guess you could argue is right here, right? So I don't know exactly how they'd be looking at this, but I'm just trying to guess right now. There's they really do treat it like an art, you know, in a very different way, because in their case, it's abstract as fuck. So I commend them for taking something and just trying to trade abstract art. That's awesome, but that's not what we do. So as we can see, price comes to tap into this area, and we understand why it's tapping. And again, based on my other videos, especially the fib video, we can see exactly where this tap is happening, right? So we have no question about why this wicked and then came up. Now we know that there might be order flow in the our overall bullish structure that may be wanting to shift bullish and continue to run new higher highs, right? Which is why we function and imagine these areas here is liquidity and these areas here is liquidity, right? Because on a lower time frame, what we're seeing in here is structures breaking to the top side. And here's our last break of structure. So this area here functions as short-term liquidity. Why did I look to why did I look to partial at this area and not just complete my trade here? Because this also functions as an area that price can come, grab the orders above, and then begin to collapse again, right? Again, it's less likely because of the higher time frame institutional order flow that's being delivered to us, which in this case is bullish over the week. So we expect it to continue running the highs above as liquidity, right? Because what's above, again, sell stops. So that's why we had this big sell stop run, and again the crunch back down as everyone begins to buy into the break of this here, right? And then we just take price back down on them. So again, why do we get involved here? As we get lower, we again find the areas of last sells before the buys, which again are seen in this overall move right here, right? Which you can then go ahead and refine how, either simply as a fib tool, right? So you have a 50% fib, or you drop lower into the market and you find the real last down move, right? And again, what can you do with the fib tool? Just use the 50% of it, right? And again, you have an area that you can use and utilize to watch price unfold at, to show you those transfers of weak to strong hands. If we don't see the transfer of weak into strong hands like so, then there's really no interest for us to be involved. Why? Because then we know there's no prerogative. There is no reason that price may unfold higher. When we see something like this occur on a lower time frame, or in an area that we imagine have orders from the past that need to be mitigated, and how do we know which areas have orders in the past that need to be mitigated? Well, usually we'll see it by previous moves that had grabbed liquidity, moved higher, and we expect that trend to continue unfolding when it comes down here, making a higher low, but also testing the demand zones in here, fulfilling imbalances of some sort, right? Fulfilling them while also delivering to you Wyckoff, or the transfer of weak to strong hands, and the unfolding of that price much higher. Now, just because this happens and price begins to unfold, again, does not mean it's going to unfold to new highs as liquidity, right? What it could mean is price will unfold higher and we partial on the way, because the areas inside of here also function as liquidity and the areas up here function as supply zones. So there are also chances that these moves here create the new distribution move that then starts a new trend downwards, which is fine, because then our overall bias will shift and we will begin to imagine all these lows as new potential areas of liquidity to continue hunting prices lower. And that's how prices are always going to be delivered to you, which is why we always stress the importance of confirmation, which is why in the mentorship we teach confirmation at another level with extra concepts you can utilize to again trade these markets. Okay. Also, if you've made it this far, I will be giving away a free one-on-one with me for an hour. So all you have to do again is comment on this video with a hashtag mentfx, and the only other thing is you have to follow me on Instagram at mentfx. Very, very simple. This is all you have to do to get involved in it, and there will be a lucky winner that I will roll on a raffle using everyone on Instagram and announce the winner on my Instagram. So make sure you are following it, right? Now, why was it that we got involved in this trade? Let's go and take a look at it on a lower time frame. So we're not going to go lower than the 1 minute because I know a lot of you do not have the second charts. So we're just going to zoom in on here and notice what occurred, right? As price begins to come into our zones, do we see a shift in structure? No. But do we see a transfer of weak to strong hands? Yes, all the way from up here already. Right, so at this point you might have an alert set at this yellow line, which is perfectly valid, right? Let's get rid of this POI level. Actually, we'll leave it in so a lot of you can understand why we're looking at this area. But as price is coming lower, we already know that liquidity is being created, something is absorbing it. Liquidity is being created, something is absorbing it. Liquidity is being created, something is absorbing it. And again, on this way down, based on the type of trader you want to be, you already have many cells that you can be getting into on the way down into these zones, right? So if you're someone that wants to scalp, that's how you'd be taking those cells down into those areas. Now, again, we're watching this as liquidity being cleared, liquidity being cleared, liquidity being cleared. So we know there's some kind of transfer of weak to strong hands. Now, as we get into our zone, we have to start asking ourselves, where's structure, how's it moving, and where are the optimal areas for us to look to be involved on a bullish run if there is going to be one? Well, as price drops into here, again, we can imagine at the time of, right? So let's just be smart about this. And I know this is hindsight or whatever. So if you hate that, then get out of here and go trade on your own. Otherwise, take the information given to you here and utilize it in the future when you begin the backtest. If you want to see more live stuff, you know, feel free to join the mentorship as we send stuff out before it happens all the time. Expectations that we're looking at all the time, right? Looking for that liquidity to be cleared. You can see this is all the way back from when price was still just taking off inside of there, right? And then this is the delivery of that same price. Right, where was it? Right, so that was the image of when price was down here, right there, right? Break structure, liquidity. I was on a higher time frame, I believe like a 1 hour. Yeah, so on a 1 hour, sent out when we were just about, let's go back here, auto. When we were just about inside of here, and right, and then we had that liquidity ran, and that liquidity ran just like we were expecting in our markups, right? So if you want to see it live, then feel free to join that. And I do one-on-ones for the people in the mentorship as well. But also, if you do want a free one-on-one for an hour, make sure you hashtag mentfx and follow me on Instagram. So let's get back into our trading idea and why we look to get involved here. So again, let's go back to the replay tool. Again, I know it's hindsight. It wasn't hindsight, but now it is because you are on YouTube, and that's how it's going to work. So at the time of, you might have been watching this, maybe your alert went off at the open of this when it had tapped in at first. Maybe even you had been looking at this as a transfer of weak to strong hands, and you might have even gotten involved on this markup. Now notice, even though this markup here off of this Wyckoff was wrong and actually came back lower, there is still structural plays that you could have made on this entire up move that would have for sure given you an entry, for sure given you at least a partial or a break even when price came back down, because you had even price shift into new bullishness right here. So at least this low became protected until it got taken out again. Now, we're not interested by this right now. And again, if you had refined your zone to the 50%, that never even got tapped. So if you had refined it, then your overall bias is going to only start playing out when this tap of this 50% of the last down before the up move gets tapped. So again, as we're watching price play out here, all we're waiting for is the tap of this to get the alert. So let's just pretend we haven't looked at price yet. Watching it. Boom. So we come onto the market and we say, okay, price is very bearish. So at this point, there is a transfer of weak into strong, weak into strong, weak into strong. But unless we start to see the breaks and the shifts higher, there's no interest for us to look for the mitigations of those last sell to buys before taking price higher. Why? Because there's no shift. Now on the other end, if we do see that shift, then we want to look to be involved, right? If it just keeps breaking down like this, there's no trade for us to take, and this zone becomes just invalid. There's no reason to be involved in it. However, now we're watching for this as a potential shift of that weak to strong hands in the market. So as we're watching this, we're seeing the selling climax, the AR, right? The ST that comes a little bit lower than selling climax, which is not usually the case, but in this case is fine, right? You can also label the schematic, because remember, the schematics are snowflakes. In this case, you have a schematic occurring here, right? You have a schematic occurring right here, right? And you also, theoretically, can be argued, have a schematic occurring in this entire area, right? On a higher time frame, if you think about this, try to think about this logically, you have a selling climax, an AR, an ST, and B. Right now you have a spring, and then you're looking for the schematic to play much higher. It could be argued that the reason that price came and ran this liquidity and liquidity here and ran so high up is because it had accumulated over all this time. Right, so fractally we can see that, but that's not important to us because we understand that on a lower time frame, just like we understand fractally, a spring of a large schematic can have its own accumulation, right? So if there's an accumulation, right? So this is an accumulation, this is an example of one. Let's actually draw that a little better. Selling climax, AR, ST, STB, spring, right? Maybe breaks a little bit higher, breaks, tests, right? So tests inside of here, breaks, and then runs liquidity, right? This whole thing that acts as an accumulation schematic has an accumulation schematic in here on a lower time frame, in here on this time frame, right? Selling climax, AR, ST, STB, break, test, has another schematic here before the real run up, selling climax, AR, ST, STB, spring, break, SOS, test, or LPS, and then the big markup. If you don't know what I'm talking about right now, just feel free to check out some of my other videos or read through this website right here, and it will unfold the accumulation schematics and the distribution schematics that we utilize to see this transfer of weak to strong hands. Hold on, my dog's being an asshole. Give me 1 second. Okay, I apologize for that. I may have to cut this video short, but as you can see, there are Wyckoff accumulations that happen within accumulations, within accumulations, within accumulations, so on and so forth. I'm a broken record. It's all good. Now, what we're looking for here, let's get rid of all these brush tools because I've kind of populated this chart a little bit too much. Hopefully this will get rid of the ones in there. There we go. Cool. So again, there is a huge Wyckoff schematic happening here, an even smaller one happening in here, and now there's a tiny one happening in here, right? So this schematic that's happening here is actually an accumulation schematic of the large accumulation schematic spring, right? So this spring is like a double spring, if you want to think about it that way. Whoops. So this spring right here, let's just get rid of that. This spring right here is a double spring, right? It's a spring of this schematic and a spring of this mini schematic. And to validate potentially this whole schematic, we want to see the validation of it on a much lower time frame, which is why we wait and confirm the things we do on the charts. So as we start watching this, you can see that price then goes ahead to break structure. At this point, you're already valid to look at these last sells to buys as continuations higher. However, to really validate the structure, we'd look for the AR breaks. So as we watch this, it does come to test a little bit of those lower areas and then breaks the AR right there. And we know that we have the sign of strength, and we can now look for those last mitigations of those sells before the buys to continue that price much higher. So what we can do again is we can pinpoint the areas in here as our last sells before buys, have our setups right at the lows and then a tiny bit lower just to allow for mitigations to occur at 100%. So if price comes to literally tap this right there, that's fine. It won't take us out, right? Because we are aware of the fact that price can come and mitigate the last possible positions in here, right? Because there still could be a position in the very last wick part of this down move, right? Oftentimes they'll come to tap the open and keep going. Sometimes they'll come to tap 50, as you know from the Fibonacci video, and keep going. But sometimes, very rare occasions, but it does happen, they'll come to mitigate every move in here while also creating more liquidity and grabbing it before the real up move, right? So this is already fully valid. Putting your stop just below this. Hey, Anakin, chill, man. What are you doing? Hello? Come eat your toys. Come here. Hey, it's okay. I'm almost done. Calm down. So, and again, you'll be looking to target overall the liquidity at these new highs, which is around 1 to 17. And again, you are not actually looking to hold that 1 to 17. Oh, maybe you are. Maybe you've executed your system well enough to be able to do this. I don't do this because I don't like it. What I see when I see this is I see the liquidity here, I see the liquidity here, and I see the liquidity here. So for me, my first partial is at around 1 to 5. Next partial is at about 1 to 11. And the last partial is at about 1 to 17. Even though the position runs 1 to 17, we're not actually making 17%, right? Please don't think that way. That's not always the case. And in some cases, I'm not even risking 1% of my trades. It'll be around 0.5% of risk on a trade just because it helps my own psychology. So at these points, your sign of strengths are valid. And from there, you fully understand. Oh my God, I'm so sorry. I need to pause. All right, he's done yelling. So from there on out, you have your mini accumulation, which might be part of your larger accumulation now, right? But what we have seen is our area that we were expecting those sells to buys to happen from, because on a higher time frame, this right here is a mitigation of what? Of a break of structure, right? And a return to a demand zone and a continuation higher. So all we're doing is we're looking at this, which is right here. And we're just looking to confirm this move here to take it to the top side off of the liquidity that was formed on the way down, understanding that there could be a potential shift here to then continue lower, and there's supply zones here that could be used as liquidity to be taken as partials in case prices do want to shift into lower time frame bearish structures. But the overall targets would be for new highs, understanding that in a bullish scenario, liquidity and targets lie above the next structural higher highs in this market. So as we play this out, let's go to a higher time frame. We can see as it gets tapped if it does. So there's the tap, and as you can see, we do drop a little bit lower like we said we might have, right? There's again accumulations happening inside of these areas with our stop again just below that wick. So you can see these are wicking out at the bottom of that wick, but they're never going below. Why is that? Because they're fulfilling every last order they can possibly fulfill at those zones. And again, you have a third wick, I mean, still on the wick, still on the line. So you know that orders are still being just fulfilled at that point. First partials are met, which is fantastic. If you were targeting for higher partials and you're just waiting for now, we can go to a little bit of a higher time frame now as it unfolds. So this is just an example of one trade. Next liquidity is met, and the third liquidity was breached and taken out this morning. So that was a fantastic execution. And again, the point of this is to show you that structurally, whether you're a retail trader or institutional trader, you might be viewing the market the same way. The difference is in how you see the areas within that structure give you the confirmations to take you to new highs, and the way that you can get involved versus, you know, taking an entry here and a stop loss here. You can look to take an entry here with a stop loss here, get stopped at a break even after taking partials, take another one in there, take another one in there, trade the sells down into those buys, take them higher, trade the buys in here, take them higher, trade the buys in here, take them higher. So there's a number of ways you can look to get involved the institutional way. And when you start to recognize and see how this transformation of weak to strong hands happens, and the weak to strong hands happen in every single area of the market, you begin to again forget about the fact that you need to, you know, make sure you're in the move, because you know you can get involved in it absolutely anywhere, and then you can take yourself to much higher RR plays. So thank you so much for watching, guys. If you want to be part of that free one-on-one for an hour with me, make sure you hashtag mentfx in the comments, and you follow me on Instagram at mentfx. Thank you so much for watching, guys. I hope this helped some of you understand Wyckoff a little bit better, understand structure a little bit better, and understand how we view structural continuations and liquidity better. And hopefully y'all are having an amazing, profitable week, month, and the rest of the year, right? I'll see you guys in the next video, and I appreciate the time if you, of course, watch the entire video. Thank you, guys, and I'll see you in the next one.